Alright, you guys know the drill. Anybody coming in, give me a sound check and all that good stuff in the alt chat. Well, that was quick. Alright. Okay, so you guys can hear me. Alright, good deal. Alright, so let me start off by saying I am not a great scalper. It is not something that I do often, especially on low time frames. It's my mentality doesn't work that fast or see it that way. I don't want to say doesn't work that fast. My mind just doesn't see scalp trades as well as I do trends and swing trades. So it's a completely different mentality when you're scalping and swing trading. And I see especially a lot of the new traders, is they want to scalp because they get into this mindset that they have to make money every 5 minutes or something. They got to do 100x leverages because their favorite Twitter influencer or whatever is doing high leverages, and they think they're making big money when they post their profit percent or whatever. But what those traders aren't showing, first of all, is they aren't showing position sizes. So they may have a 70% profit trade, but they probably only put $80 or something, $100 into that 100x trade. But they'll post that on their Twitter for clout, for to get likes and engagement or whatever, and it's given a false sense of reality to new traders that's how they have to learn how to scalp, and that's what they have to do to make money, and learning how to trade is by scalping. But they quickly find out the reality is that it takes a long time to really master how to scalp, because you don't even know the basic fundamentals of trading in general. It's 100x leverages, 50x leverages. Identifying a stop loss, it's way too tight, so you can get wrecked way too easily. It's too fast for a lot of new traders, and it really doesn't give a good sense and a good grasp of what the reality behind trading and the emotions behind trading. And that's why a lot of new people destroy their accounts in no time at all, because their favorite Twitter influencer is posting all these profit gains or whatever. So and that's one reason why I don't do it. I see trends a lot better, swing trades a lot better. However, the fundamentals behind scalping are the same as they are with swing trades. The main difference between the two, the biggest difference between the two, is the mindset, the mentality. Because when you're swing trading, you're holding for longer periods of time for bigger target prices. When you're scalping, it's quick in and out. Doesn't matter what profit you're making. Profit is profit. Okay, so let's look at Bitcoin, for example. So this is an hourly time frame. If I'm scalping, and if ever, this might be where I would scalp. And I was showing this to, on CRV even, last night. What I was showing, and I think I was on the 30-minute time frame. So I was doing a little live session, so to speak, with Kiki or Enrique or whatever, and Vegeta. So I was showing them this, and the principles behind scalping and swing trading are exactly the same. The time frame is going to be the main difference. So it is still based on support and resistance zones, period. All trading is, no matter what. So let me clear this and clear this. Okay, so I was showing them this, and I had the 7-day moving average on, and I was showing them how I was reading the MACD for my trading style with the support and resistance zones. So it was an obvious clear support zone right here at the lows of $4 to $4.30. I was telling them last night I didn't expect to see much lower than $4.20, $4.30 at the lowest. And we hit about that range minus that little wick there. So it was pretty well right on point, kind of at the top of that support zone there. Okay, so you can do things a lot of different ways. And I made this, I kind of copied the trade challenge notes over here so we can kind of do like scenarios. I'm not going to do any live scalps because I suck at scalping. So especially on a 15 and 30 minute time frame, but I at least copied over the number so we can do like a scenario type basis or something. So if we're looking at Bitcoin, for example, same principle. Okay, so I mean, let's just note this zone right here. So obviously we're not going to catch every top and every bottom, and that's fine. You guys have to be aware of that also, that you're not going to catch every top and every bottom. You're not going to sell the perfect top of the trend. You're not going to buy the perfect bottom of the trend, because when scalping, the goal is to just make profit, period. So it's still based on a game of support and resistances. So the first thing that you would always want to identify is where those levels are. Okay, so we obviously have a wick top here, matching some candle bodies there, kind of cutting through a candle body there and matching a wick there. So we already know where our zone is. Okay, and we have these candle bodies here and a candle body there. So we've already made our zone. So we know where our zone is. And if you see the breakdown failure, you can use a trend line even. Okay, so even on this 1 hour time frame, all of our price action is above this trend line, and then we lost the trend line here. So now we know, or should know if there's some level of experience with trend lines, that when that trend line is broken, we're going for a reset. Okay, and we don't really care to look for shallow minor support zones or whatever. We want to look for something a little bit heavier and a little bit major. Okay, so I can at least identify a trend line and know that our trend was broken when we lost the trend line. So we want to look for some heavier support zones, and typically in a pullback you look for the bottom. Okay, a lot of the times you're not going to see supports land on the top of the support zone. You're more or less going to try to see if it's going to reach the bottom of the support zone, because then that's a good true test to see whether if the bears are going to break below and continue the trend, or in this case the bulls held even the bottom of that support range. Easy peasy. So number one, always identify where your support and resistance zones are. Okay, so this is an hourly time frame. Now if this was me, I would not have bought right there. Okay, so this only just first tested the previous support zone. So I would not buy one test. I always look for at least 3. So if there's 3, sometimes even 2 if this trend looks strong and reversing out of there, but at least 3 tests in a support is a good enough confirmation for me that bulls held that support zone and the bears failed to break. Okay, so then it's just a matter of where would my targets be. Okay, same principle. Where are resistance zones? Okay, so we got a resistance up here at the top because we got candle bodies matching candle bodies matching candle bodies. Okay, we have another resistance zone up here, same principle. Candle bodies and candle bodies. And then now we can draw a trend line. So let's say that these candles didn't exist, for example. So this is blank right here, and we only were able to see this. Same principle, we want to identify where our support and resistance zones are. We already identified our support, 2 target resistance zones, and then now we see a high and a lower high, so you can simply draw a trend line. Okay. And then anywhere in that first resistance zone. So now that we have a high and a lower high, we should expect, if you're scalping, look for a rejection underneath this trend line still. 'Cause anything under this trend line is going to be a bearish retest. Okay, so let's say that we saw this triple tap here into support and we didn't catch the bottom. Let's say we maybe caught it like right here at, let's just call it $60,007, and we already knew where our resistance zone was, and we already had it plotted out. So that's a 3.5% move. Okay, so let's go over here to our wonderful little numbers game here. So let's just assume that we're starting with a $5,000 position. We're obviously not going to go all in and trade with a $5,000 position. Especially a lot of you new traders, please practice risk management. Don't risk your whole portfolio. Play a little bit smaller. So let's just say you want to do $1,000 of that $5,000. So let's say you're playing with 20% of your position. So our position size, well, let's do our entry first. So let's say we got $60,500 entry, okay? And let's say, since we already knew where our zones were, let's say we sold maybe somewhere right here in the center of this yellow zone, and let's call that 62,760. Okay, so that's about a 4% move, somewhere around in there, just like that chart shows. I didn't quite have my number right there in the right place. So that's a 4% move. Okay, and let's say for our leverage, let's say we were playing smart. Let's say we did a 3x leverage. Okay, so that's about 11 to 12% profit there. And if our starting portfolio balance is $5,000, and we only risked, so our position size would be 3,000 since we had a 3x leverage. Oops. Okay, so in this quick 4% move, our total profit was about $336. Okay, that's a scalp. Quick in and out, small profits, you're in and out. So we didn't buy the exact bottom, we didn't sell the exact top. And that's where a lot of people get confused. Like, oh, I should have held on to it a little bit longer. Oh, I could have bought a little bit lower if I waited. It's all hindsight. Scalps are scalps, you're in and out, profit, period. Okay, so now let's say we took that quick 4% scalp right there. So let's leave that on there. Somewhere in that 4% range. Okay, so we saw the rejection, matching the top of rejection here, also rejecting off of our trend line. So now we can short it because the bulls failed to break above that trend line, failed to reclaim this resistance zone. So it's a clear bearish retest. That's just kind of trading 101 when you have resistance failures, trend line failures. It's a bearish retest in this case. Okay, so we see this downtrend, here's a lower high, here's another lower high. And then this was our reclaim zone since this was our resistance. So we did break above it a little bit, but it was not a sustained pump. And let's say that we see it falling below that resistance zone now. So it's not going to hold for the bulls. So let's say we shorted it, and let's say we caught just beneath this zone. So let's say we caught it at 62.15, and let's say we shorted it again, and we maybe shorted right on this wick somewhere because we saw this little bounce right here. So let's do a little bit smaller. Let's go there. So let's say our I have to do this backwards, unfortunately, because my formula doesn't account for shorts. I didn't add that in the original formula, so I have to put it backwards. So our entry is actually going to be 62. Okay, so our entry is actually 62,250 or whatever, and our exit is actually going to be down here at about 62.60. Okay, so the entries and exits are backwards because I didn't make the formula account for shorting. And again, let's say we did another 3x. So let's say we risk $1,000 again, times 3 for our leverage, for a total of $3,000 position. Okay, and we got another $297 profit. So in 2 trades, we made $633. So that's 2 quick scalps. Okay, so if you'll also notice that my position sizes are the same, so I'm not increasing my risk. So that is one strategy that you guys can do if you're scalping, is use, it depending on what leverage you're using, only risk a certain portion of your portfolio, a small portion, but use that same amount of risk and let your portfolio slowly grow. Okay, so if you're sticking with the 3x leverage and you're comfortable with that, risk $1,000 or so of your total starting portfolio and just borrow the rest in that leverage trade. So if you're risking $1,000 of your $5,000, you're playing with a 3x leverage, your total position size is $3,000. So you're really making profit on that $3,000, but you're only risking $1,000 of your own money. So now we've made $633 in 2 trades. So let's say over time that this portfolio grows, and let's say after about 2 weeks or so of some good trades, some wins and some losses or whatever, let's say our portfolio is now $8,000. Okay, so as your portfolio grows, then you can still use, if you're comfortable with the 3x leverage, and then you can actually increase your risk and risk a little bit more for a little bit more maximum profit here. So now, same principles apply. We look for support zones down since we did lose this support. So here's our next support zone. There's a top and a bottom. Our trend line is always going to be our trend line until it breaks. Okay, so now this previous support zone was broken. Okay, and now we look for our next support zone down. So now this is going to be a resistance. So we could see something like this for Bitcoin, and we still watch for a rejection there. So if we're looking at this, we're looking at a nice little base support there, and let's say we took another long, and let's say we sold at the bottom this time. So that's a quick 3% or so there. So we'll have an entry at 58. Let's just call it 58 even. And we sold, what is that, 59.9? 59. Okay, so another 10% profit. Okay, so now we risked a little bit more. We're still using, let's up the leverage. Let's say we wanted to risk a little bit more and go 4x leverage. So again, this is kind of just over time once you get a little bit more comfortable with your trades. And you want to kind of bump that up from 3x and you want to go to 4x because you have a little bit more in your overall portfolio to play with, and you want to increase your risk a little bit more. So you bump up the leverage one, you add a little bit more money, so now we're playing with $4,000. So now our profit is increasing. So we're using roughly about the same trade, so we're still looking for those 2 to 3% quick scalps, but they're adding up, and now that we are able to risk more, our portfolio grows more because our profits are a little bit more. Okay? And then the same principle. And again, this whole, let's say it does go all the way up to the top there. This is the bottom here at 58K, and let's say that's a 4.5% move to the top of this yellow zone, but you sell below it at 59,000 or something. So you're, again, you have to get into the mentality and the mindset that you're not trying to catch the tops and the bottoms of everything. It's really, you're just making profit. So if we're looking at SHIB, for example, since SHIB was like all of the hype right now. So this was a nice big pump. So since we have a clean chart over here, first thing first, just identify where your levels are. So if anybody remembers from a previous live stream where I called this a shit stick, okay, after a nice good run up, and there's a shit stick candle with a big wick, that, and look where it's nestled right there into a support zone. So again, that's our first support, or one support level. Next one down, and again, that is a support level because all of these candle bodies, these tops, are matching each other. So you want to look for multiple touches on candle bodies. If they happen to, you know, cut across and catch a wick or something, that's fine too. But we want to look for the more touches. The more touches along a line, the more solid of a foundation that's going to be for a support or resistance. So then now we can just make a box zone there, somewhere like that. Because again, two candle bodies, matching two wick bodies, and then there's a wick right here in the center. So you can plop that down as a support. Now, obviously, we may not be expecting it to drop that low, but well, I mean, what we're just kind of doing is we're planning out trades. We're planning out our zones. Okay, so say SHIB, and depending on what indicator you're using, so for me, the MACD looks like it's going under bear here, and we obviously have a divergence line that our RSI is not going above. At the same time, our price action is making higher highs. So let's just play that scenario that we are going to reject here for SHIB, and you want to short it. Okay, so this is a rejection because we have a big rejection here from this wick and a lower high here. So we've already identified where our support zone is. So let's just assume that the chart does something like this and then bounces again. Okay, so this is just a scenario again, guys. This may not happen this way, although it probably will. So that, since that shit stick is there right there in that support zone, that has to be retested at some point. So when this price action rolls over and we already know that the bulls are not making a high, that this is going to reject right here, we can take that short. So let's say, let's just call that, what is that, let's call it 860. Okay, and we know our zone is down here for 6,500, but let's say we get out a little bit early to lock in our profit, and let's call that 7,000. So let's say, and again, this is short, so I have to do it backwards. So let's say our entry and exit. Okay, and let's say we are comfortable again with a 4x leverage, and we're risking again $4,000. So bam, big break, big win, really solid there. Shit, CRV is pumping. Excuse my French there on that. Very solid candle there for CRV. Okay, anyways, back to SHIB real quick. Okay, so we've already identified where our support zones were coming down. We already can see where a rejection point is going to be. And given the size of this pump, so where would this was the 23rd. So we've already started the uptrend. It's a parabolic. I mean, it's clear that SHIB is going to dump at some point. That was a parabolic move, and this is where our first support is going to be. So even if you don't catch the short, let's say that this short, you missed this short, okay? So that's big profit there if that is a potential short that you take. And you're only risking $4,000 because your portfolio is growing and you're using a little bit higher leverage. You're still risking your initial $1,000, but you're upping your leverage to a 4x instead of a 3. So if we did a 3x, I mean, it's still great profit. That's still, you know, almost $2,000. Okay, everybody's talking about CRV right now. I mean, I get it. It's pumping. Let it roll. Look at the MACD here. So, yeah, we're moving on CRV, so I'm not worried. So, I mean, CRV is probably going to probably still hit that 650 range or something, and then roll over, and then we can short it. Wonderful. Great. This is a scalp video. All right. Same principle, though. So, SHIB at some point will come down, and this scalp may take 2-3 hours to do. So, it may not, this is a 30-minute chart, so it may not happen in 5 minutes, because everybody's looking for those quick 100x leveragers or 50x leverages, make 50-60% profit in 3 minutes, and then boom, they made money. It's too risky playing that. So with lower leverages, you're going to have to be a little bit more patient and maybe not play on a 1 minute or a 5 minute time frame. If you are going to scalp, please use low leverage on at least a 30-minute to an hour time frame. So you're not glued to the screen trying to catch every 1 minute candle, because they are extremely misleading. Okay, so in this case, and you may not catch every trade. You may not catch every trade. So let's just delete this one and say that we didn't catch that SHIB short. Maybe we were sleeping, but we wake up in the morning and we see this. We see this first support test. So we didn't catch that short, but we want to catch a long because we see the bulls are holding. and we need to bounce on that support. All right, so it's just turn around, flop out resistance zone. Let me make this one. I don't want the line red, I want the box red. Okay, so somewhere up in there, same, and it's just the same principle. So now we have a high, lower high, and a lower high. That's a 17% trade. Okay, so let's say our entry is, we didn't quite catch the bottom. Let's say it's 6,800, and we want to scalp it up to about, let's just say, we want to close it at 76. Okay, so this is a 17% move, but we didn't quite catch the bottom, and we're not going to sell the exact top. We're just kind of, guesstimating where we want to take a profit at. And let's say we bump that up to 4x leverage. We're still risking our same $1,000 that we started with, but now we made $1,800 profit there. So now in 4 trades, 4 scalps, and these are even low leverage trades. In 4 trades, you made $3,000, or about 60% of your initial portfolio, which is great. I don't think anybody's going to complain about that. So now our total portfolio is at just over $8,000. Well, about right where we are there. Okay, and then same principle, short it back down. Okay, so. And a lot of the times when you see one test of support and then a failure at resistance, a lot of times that next test of support is not going to hold. So you can kind of have that confidence that we're going to look a little bit lower. And let's say we dump all the way back down to 6,000. So let's say you hold on to this one a little bit longer. So our exit is actually 6,000, but we're going to put it over there on the entry. And let's say we bump that up, and that's a 28% for 113% profit. And again, we're still going to play with a $1,000 out of our initial portfolio, even though our account is now $8,000. So we played that $1,000 at a 4x leverage, and our profit on this short becomes $4,500. So now we just took a $5,000 account and turn it into $12,600 in 5 trades. Now I know it's easier said than done, but the principles are going to be the same. It doesn't matter what it is you're trading there. Well, CRV, same principle. So this is what I was showing Kiki and Vegeta last night. Okay, so we were in a downtrend. We had a high and a lower high. Okay, and you can draw that straight across there, and we almost just tested that right there. And then look at our lows. So there's a low and a lower low and a lower low, and there's no support here. So there's no candle bases. There's none of this. No accumulation zone. It's just a support gap. So our next logical support was that 420, 430 area. So if that, and I think I even mentioned that last night roughly, that we could take that long down here in that zone and probably sell up here near that $5 range, catching that that resistance trend line. And then there it is. There's 17% pop. Obviously, we weren't going to catch that low wick or whatever. Let's just say we caught there at $4.20, and we say somewhere right there around $5 or so. Yeah, I don't like that. So we'll go from a candle body to a wick on this one. Okay, so our rejection failure right there is now at the bottom of that resistance zone. So we didn't quite reach the top. So we got some candle bodies nestled there, matching the top here, and now we just rejected there. So even if we bought 420 on that scalp, okay, so our entry here, $420, and let's say we didn't quite sell that top there. Let's say we kind of sold somewhere right here at about 4.8. Okay, 3x leverage. Say we did a 3x leverage. Okay, now let's say that our account is now, since with this we made this much profit so far on these first 5 scalps. So we made $7,500 in 5 scalps. Our portfolio is now $12,000. So now we can bump up how much we risk per trade instead of the $1,000, and let's say we want to risk $2,000 of our portfolio. So that would leave $10,000 on the sidelines, and we're only just trading with $2,000, and we have a 3x leverage. So our total position size is going to be $6,000, and then bam, there's another $2,500 profit, and that's how quick. Okay, so in what is this? 6 trades. Now 6 trades, we've made $10,000 profit. So we've basically doubled our account or tripled our account or whatever, because our total account value would now be $15,000. Okay, so this is only wins, of course, because obviously you're not going to have all of your wins. You may get stopped out. So in scalp trades, your stop losses are no different than swing trades. You identify where your support zones are, and you would want to set a stop loss just below even the lowest wick of a previous support. So in this case, oops. So let's say you got a 413 entry somewhere right here. Somewhere right here in the middle of this support zone here. Okay, 413 entry, you want to stop loss right below that wick somewhere. So let's just say 401 or whatever. Now that would make you sweat. Okay, so that may only be about a 2.5 to 3% drop down. With leverage, that'd be about 6 to 9% or something, which would be a little bit of a hit. But in this case, when setting that stop loss, if you know where your support zone was and the low wick of that support zone, then your trade would have been saved. Obviously, I wouldn't go knife catching on that wick. I would have waited for the retest, which was here, and your trade would have been safe either way. So that's how you can set a stop loss on either swing trades or scalp trades. So you want to know where the bottom of your support zones are, and set your stop loss just slightly below the lowest wick to avoid that stop hunt, because generally they're going to test one of the previous wick lows or just below the candle bodies for a stop loss hunt and liquidity grab, which is exactly what that was. So this big dump right here that got bought up on this wick was a grab for liquidity and then a retest of the support. So now we've held this support zone, and now we started pushing again. Okay, so really good trade there on CRV. Really bad on my part for buying pretty much up here on the top of this damn wick, but my MACD is still showing a good strong daily trend, so we're still moving in the right direction. So this may be a daily time frame, but the principles are still going to be the same between swings and scalps. It's all going to be based on support resistance zone. So the biggest factor between a scalp trader and a swing trader is the mentality, because when you're a swing trader, you're looking at a daily time frame and you're looking at a trend. So a lot can happen. So this is a 40% zone right here. So 40% is great. That's a nice good zone. But if we were to look at this same zone on a 15-minute time frame, look at all of these scalp opportunities there are. So now we can start breaking this down. Oh, that's really hard to look at. Okay, so now we can start breaking this down in the same principle. Okay, trend line, uptrend. Resistance, resistance, resistance. Okay, 1 touch of the trend line, 2 touch of the trend lines, 3 touch of the trend lines, and then a resistance. Well, we want to play our resistance zones first. So we got a top here and a bottom there, matching the top and the bottom over here. So let's say we saw this snaking up. So where our support held, we know where our 2 levels of resistance are. Okay, so there's 1 scalp. If that's the only one you took and you missed the rest of this move, great. Doesn't matter. You made profit right there. Okay, so let's say this is a 15-minute time frame. So let's say you maybe bought here instead, and you saw it push past this resistance level. So now you know where your next major one is. Great. There's another scalp trade, 13%. Okay, short. Okay, you see a rollover. Your previous resistance zone is now going to be support. So if this was red for resistance, anything that holds now above it is going to be bearish for buys. It's the same zone. It's just the principle of where price action is. So anything below it would be for scalps and shorts. Anything above it is going to be for bulls. Okay, so same principle, just as we showed with Bitcoin and Shiba or whatever. So this was a previous resistance zone. You've already taken a scalp long there. You didn't take this trade, and let's say you missed this short here, but you already knew where that zone was. You saw a retest or a buy here, a wick buy up there. Okay, bam. There's another 7%. Okay, you didn't catch the top there. No big deal. Doesn't matter, because the goal of a scalper is to just make profit, period. Not catch every top and bottom. You can't beat yourself up with hindsight like, oh, it could be this much more if I held more. That's for swing traders. Okay, again, retest of the support, matching that same area. That's a buy. Bam, still rejected again at that same resistance level. Okay, so it's just throw down your support and resistance levels and know where they are. So now as the chart develops, what we're seeing now is this trend line is no longer needed. This support zone is always going to be a support zone, but now we can start to see a new uptrend on a trend line. Okay, so rejection, you sell your scalp along there, log it, bam. Okay, test of the trend line, a high and a lower or higher high, higher high, higher high. Bulls are holding that trend line, bam. Okay, so you can even sell that same resistance again, and so what? So instead of catching that whole 7.5% move, you maybe catch 5%. Great, log it. Okay, you see a rollover, two rejection tops there. So now we already have our basis of where our support is, because the support is now off that trend line. Okay, so we buy again off near that trend line. Sell that same resistance again, bam, another 3%. Okay, and it's just creeping up. So the more that it creeps up and the more it keeps knocking on this resistance, at the same time you have higher lows, this is what's called an ascending triangle. Okay, so higher lows, still holding under that resistance, and eventually, bam, that's going to break. So, okay, we sold here again or whatever. Now our trend line is still holding as support, so you can buy it again. And you can even sell again for 2%, or you can see if that trend line is going to break on that resistance, and then it's just a matter of looking up above. So next resistance zone above, somewhere up there, because obviously this is the next previous high. Okay, so again, buy the trend line. Bam, 8%. Didn't quite sell the top, but great, whatever. We knew where our previous resistance high was. 8% profit, log it. Money. All day. If you have the experience, of course. Now, I'm not that great at swing trading. It messes with my head, especially since I am a swing trader. I have a completely different mindset. I can look at a chart like this and say, same principle. Same principle, though. Okay, so again, already knew where my support zone was because I can see it clear as day, even zoomed out like that. Okay, so we have some base candles here. Here was the retest on the top of the support. Here was a dump all the way back down to the bottom of that support. Retest, retest. 1, 2, 3 tests. Okay, if you guys remember from the 15-minute time frame where I showed you 1, 2, 3 tests in a support zone, that's a guaranteed buy. Okay, so then it's a matter of trend line. Okay, this is a trend line break, and then start plotting down where your resistance levels are for. Well, we're on a daily time frame, so we're not scalping. So I don't need all the minor resistance zones. I want to look for heavy daily resistance. So up here, top, top, top. Okay, and then look where that wick is right there, right at that top. right at that top, that 350, which I told you was that breakout level that we had to get above. Okay, and then now we can see trend line. Same principle, low, higher low, higher low. So now we have 3 tests on a trend line. So even if you didn't catch the bottom down here, no big deal. You still got 2 other tests. And then again, it's another just ascending triangle. Higher lows, resistance, 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 break. So now, as I showed you guys with the scalps, so that's a resistance. So now anything above it is a support resistance flip, and now anything above 350 is bull. Okay, so this dump that we just got yesterday didn't quite make it down into that green zone, which I'm very thankful for, because I probably would have lost $50,000 or $60,000 that I just made on CRV. I would have given it all right back from a bad entry, but now I see that we have a good push trend going. Okay, so if we look where that wick was, we're over here matching the tops of previous wicks. So we do have a little bit of a zone. And then we touch just above that zone there. So that's a good indicator there for CRV that the trend is still bull. And again, if MACD, if anybody remembers, good solid dark green histogram MACDs, and our lines, our MACD lines are really close to our histograms. And we're still going to show a trend, so we should see something like this, a little bit higher, and then when these start to get lower again and light green, and then we start seeing these lines kind of roll over, and then we have a gap here in our MACD for an overextension. Then we know to start to get out, because this is a daily time frame, and it'll grind its way down and reset. So if that happens, price action should do, you know, something like this, maybe 650, 680 for the next weekly candle or something, and come back and then retest the support. Same principle with swing trades as it is with scalps. The difference is going to be time frame and how long you're holding and your mentality. Because in a swing trade, when we see big dips like this would panic a scalper. A scalper would probably be liquidated, because he's probably either, if he wasn't paying attention, he's probably using high leverage, and he would have been wrecked. Where the hell is it? There we are. Okay, so if you were scalping this with higher leverage, that was a 20% drop. You're wrecked. You just lost that trade. As a swing trader, I mean, we can see how fast that recovered. I mean, it took less than a day to recover from that dump. So I'm not going to panic over get a bad entry when the price action is almost already recovered in a single day. Because if I'm looking forward to the next 3 or 4 days and not having to stare at the chart 37 times a day, I'm fine. I know eventually I'll end up in profit, and I can wait till the higher time frames show that bearish trend and start rolling over, and then I can cash out my profit. And if it goes up here to $6, $7, I'll probably, I don't know, I think 5 or something. Let's just say it goes to $7. That's another 36% move. I have a 3x leverage on it. It's about $180,000, $200,000 position. So if it goes to about $7 or something, I'll make another $60,000 on it, and for a total of about $110,000 to $120,000. And I'm sitting there holding from somewhere when we started watching it was somewhere around here in the 220s. So a month. So a month that I've been following this trade, watching this trade, even if it just went to $7 for the time being. Okay, so I held and follow a coin, follow the same chart, and didn't trade all the smaller time frames, and I just swing traded for a month. Great, made $150,000, $200,000. I'm not going to complain about $150,000 to $200,000 for holding a coin for a month, because the scalpers, they're going to be down here on these 15-minute time frames trying to catch these 3%, 5% moves, destroying themselves. It's like, oh man, what's it going to do? Oh, we're pumping again, we're dumping again. I got to close this trade, and they'll probably take just as many small time frame losses as they do small time frame wins, and their profits and losses can kind of balance themselves out, and they just gave themselves 9 million headaches staring at these 15-minute and 5-minute time frame charts where I'm just chilling. I mean, yes, yesterday I was on this dump from that bad re-entry. I ended up probably down here at the lows sitting in about $30,000 of losses. But again, less than a day later, I'm almost back to my original entry. And if this trend continues, okay, so I wait another 2 or 3 more days, and then I end up in profit again. This right here kills me. I just can't do these low time frame scalps. But for some of you scalpers, as a strategy, see, look, here's SHIB dumping. So just as I figured. So another thing for low time frame scalpers is if you look how close these candles are together, like they're grouped real close together. So it's not often that you're going to see a massive dump and then a recovery. It typically doesn't happen when candles are that close together. So this is why I have this squiggly. It's not going to straight shot down, but it's going to kind of work its way and grind its way down. So you could be holding this short for, I don't know, 4, 5, 6 hours or something, and then you can easily set your stop loss above these 3 wicks right here that are about the same price to secure your short. So if you were short from, let's say, in the middle of this zone at 78, okay, so that's about 5%. You may not want to hold your short that high up for a stop loss. Maybe just above that wick there, 2.5%. Okay, great. But it looks like this is just going to kind of snake its way down. So if you didn't take the short, if you're scalping, okay, great. You missed the trade. Wait till that shit stick down there and that support level is retested, and then rebuy that support for the next scalp up, because that is a good opportunity there to catch about 14 to 15% profit on a scalp with whatever leverage, like we showed over here on this one or whatever on this one, something. But still a good opportunity, and with the volume and hype that SHIB has right now, and traders cashing out profits, cashing out their millions, it's going to be a scalper's paradise. So a 30-minute time frame is a good time frame to practice on, to scalp on, using just a little bit of your portfolio or whatever. Don't risk a whole lot. But first, throw down where your support resistance zones are, so you know where to look for bounces and rejections. So that'll help you identify where you can long and where you can short, and where you're going to take profit. I know that's a lot easier said than done. I absolutely hate scalping, but everybody's got their forte. Gooner can scalp all day long, for example, but he can't swing trade for crap. His mentality, his mind is geared too much towards the quick scalps, the quick profits, whereas I'm opposite. I can't scalp for crap because I have too much patience with the chart, and I could end up holding a scalp trade too long or not long enough and screw up my portfolio, especially if I'm playing with a little bit higher leverages, which is why I was never good at scalping. So it'd be best for a lot of you new traders especially to identify what you're comfortable with. If you're comfortable and you can see charts more clearly on low time frames for quick profits, or if it's just too hectic and you find yourself confused a lot and it's stressing you out, okay, great. Scalping's not for you. Switch to swing trades and go to a higher time frame, a daily time frame, and hold for longer periods of time until you start to understand and get comfortable with charts and how they read, how the game is played, and you can go from there. Because you can also scalp within a swing, which is kind of what I do, and it's what I've been doing with CRV here. So I think we bought down here in the 220s. I think I sold maybe around 3.6 or so and made profit on there, and then reloaded somewhere in that same zone on that breakout. And then I think I scalped again at like 3/8 right here on this candle. Okay, so it did reject, but it obviously did get that next pump. So the trend was still in my favor. So even if I got a bad entry on the reload here at 3/8 from this 2.2, 2.8, 2.9 buys or whatever, because I had buys kind of scattered. So I made profit, and I shoved that profit to the sideline, just like I was showing here. So if you had a, starting balance of $5,000 and you're making this profit here, I was reloading the same amount of coins, so my position size was still the same. Okay, and then that profit was just shoved onto the sideline for another coin or to put in the bank and pay myself. So even though I scalped within a swing and I didn't get a good re-entry, just a tad late, the trend still proved on the next candle, and then I sold up here like 4.7 or so near the top of this daily candle, because a big candle like this on a daily time frame, you can always expect some kind of pullback, at least 50% of that candle. So we was expecting a pullback to that 4.2 area, which was half the length of this candle, and that's where I was going to reload. However, the next candle pumped, and it pumped above the previous resistance highs. So that put that FOMO in my head that we were just going to, just clear and pull a Shiba or something and go straight to $12. So I got caught. I got caught with my pants down, and it happens. And then I was paying for it because I shouldn't have scalped or whatever, because that 380 entry, I still had a very safe liquidation level down here, and I'd still be in profit even after the dump. So shit happens. That's the way the game is played. But the trend is still in the favor, so I'm not overly too worried about it. So I'm not going to trip, because by the end of this weekend I could still see that $6-7 range and still cash out more profit. So that's really the difference between scalps and swing trades. So again, look where we rejected right there, almost right at that $5 mark. So that wick is matching a wick, matching a wick, matching candle bodies, right in that zone. So that's a good rejection place. Okay, and we've already identified where our support zone was. So that would have been a heck of a scalp trade. Okay, so it's got a nice base support here. So here's a test, 2, 3. Retested it again and again. So there was nothing indicating that the bears won here or here or here. So that would have been a good buy down here in that low $4 range. And that was a nice 20% push up to that resistance level. And you could have even scalped it up to that resistance level, because look, and again, tops, matching tops, and rejected right at that top. And then we can see the support base here, right at the top, right at the bottom of that wick. So it's walking, it was walking itself up. So anytime that a resistance top is broken, so we broke above it here, then it's just a matter of looking at the next level up. And if there's a rejection, a resistance becomes a support. And then now we pumped and broke this resistance, and now we're just looking at the next resistance up. So now, in theory, this should be our next support to watch if you're scalping. Okay, so this trend continues as long as that support level holds. Okay, if the bears win and break this support, then it's just another test of 440. And then, bam. So the wick matching the candle body might match something here in a future trade. So that's only valid, though, if this 460 range, 470 range is broken. Okay, so then that would put a high, a lower high, or I'm sorry, a higher high, and then another higher high. So then, in theory, it might retest that again, and then make another higher high, and then for that final push. So again, this is the 15-minute time frame, so this may happen on the next daily candle or so, which could work because it could fit that time frame here. Okay, so we can kind of float in this range here, and then as that 7-day moving average comes up on the next daily candle. So that is a possibility. That is a scenario. How I'm playing the low time frames for scalps inside of a higher time frame for swings. So if you're a swing trader and a scalp trader, excuse me, and you see a good solid swing trade trend or a bullish trend, it'd be best not to scalp it 2 or 3 times and then walk away, because you're going to miss bigger moves when looking at the overall trend. A lot of scalpers will want to scalp down here for 5-6%, and then they'll move on to something else because something else starts to move, and then they'll forget about this coin, and then they'll turn around, and then 2 weeks later it's up all the way up here, and you made a couple $1,000s down here, but you're missing the bigger picture of the profit. So that's one of the big differences between a swing trader and a scalp trader. So identify what works best for you, what you're the most comfortable with. And for me, again, I am a horrible scalper, and I'm much more comfortable holding even in loss for longer periods of time. And then you can use whatever method you want to log your trades, log your wins, log your losses, or whatever, and then increase your risk as your portfolio grows. So then not only do your losses become greater if you take a bad loss, but also so does your profit. And that's how I make the gains that I do, is I'm a little bit more riskier in my trades, but because I can look at a swing trade trend, I can scalp within a swing trade trend, and if I got a bad re-entry from reloading too soon, great, whatever. I know what my trend is, so I know that even if I got a bad re-entry on a scalp, the trend is still in my favor, and my price and my losses will recover, and it'll put me back in profit. Okay, so Crypto Phoenix is asking, when holding a swing with leverage, do fees add up fast? Yes. I mean, they can. It depends on how long you're holding. That would probably be more for like future contracts, because those future contracts are a predetermined contract date. So you could be holding futures for 3 to 4 months, and fees can eat into your profits, and they can on just regular margin trading also as well. But thankfully, most exchanges, especially DCX, they're not that bad. But I look at this bigger picture. It's like, okay, so I got a $2,000 position here. If I'm going up here, if we're going up here to $12, I'll make I don't know, $250,000, $300,000 when it gets up here to this $12 mark. And my fees at 0.01% per day, plus I think 0.1% initial fee. So if I make $200,000, $300,000 on this trade, my fees for that trade may be $20,000, $30,000. Don't quote me on that. That may be kind of high. But the larger your positions are, yes, the larger your fees are going to be, especially if you're holding for longer periods of time. But it's not going to eat into your profits too much if the trend is in your favor. Now, if we looked at Band, for example, on the Bitcoin pair, I'm probably getting absolutely murdered in fees right now, because I've been holding this, I think, no, that's November, from May, right around here. So this was showing that, this was again showing that clear uptrend. Okay, so even if we took a trend line from that wick and we're putting in higher lows, so this was an ascending triangle that we were expecting to break. All the indicators were showing that clear sign, and then my entry was somewhere right in this mess because it was showing all the signs that was going to do that. So I've been holding this since May, and it's about a half a Bitcoin size position. So I've been holding this for about 4 or 5 months. So yeah, I'm sure the fees are absolutely eating my lunch right now. And I'm still sitting in about $14,000 loss on that position. So yeah, the fees can add up the longer that you hold the position. So it's good to make sure that the trend is most certainly in your favor, and you don't want to be holding too long. So I mean, yeah, to answer your question, yeah, the fees can add up and they can start to chew into your profits, and that's whether if you're margin trading, options trading, or futures trading. Okay, so I really hope I explained how to scalp. And I'm trying to explain scalping based on how I trade, which everything is always going to come back to the support resistance zones anyways. It doesn't matter what indicator you use. It doesn't matter if you're doing Elliott waves. I mean, it doesn't matter because if we're looking at this structure, for example, I mean, if you're throwing an Elliott wave on this and you're scalping using Elliott waves, obviously this is going to be an ABC correction, and it's still going to 100% be based on support resistance zone. Okay, so this is going to be like your first level support, so that's going to be your A wave. Your B wave is going to be maybe not that high. It could only be somewhere up here, but it's still a resistance zone. It's probably off of the bottom of those two wicks right there. You know your C wave is going to be bigger than your A wave in some kind of, 1 to 2 to 1 extension or whatever the hell it is. So your C wave is obviously going to be deeper than your A wave, which is going to be your next major support zone down. So even Elliott waves is all going to be based on support resistance zones. So if you're scalping using Elliott waves, make sure you have your support resistance zones down. If you're using support and resistances instead of Elliott waves, it's all the same principle. Trend lines will always fall on support resistances. Fib lines will always fall on support resistances also. Well, this is a 30-minute chart, so that's going to be hard to do. Okay, so trend line from the last bottom of the impulse to the top of this impulse, and look exactly where our support and resistance zones are. Right off the 0.23 line, our zone right here is right off the 0.5. Our next level down, perfect right off the 0.7686 fib. So even still, fib lines right on support resistance zones. And this is why I don't use fibs. I don't use multiple moving averages. I don't clutter up my chart with a whole lot of different indicators because this is king. Support resistances are king, and you can play price action zones in scalp trading and keep your chart clear and clean so you can see what what's happening in the chart. So that is today's lesson, I guess, guys. So I hope I didn't confuse the shit out of everybody. And don't take this to heart, okay? This is just an example. Because obviously, we're starting to push. So this wasn't, hey, we're going to drop back down. So it was just an example of a resistance rejection. So it looks like we're doing really good right here. So I'm happy to see that this is starting to push again. Okay. So, I mean, that's it, guys. I know it's easier than what it is. The first thing, especially a lot of you new traders, is I don't advise you scalping on low time frames. Most certainly don't advise scalping with high leverage as a new trader. I think new traders that are still learning should really start to focus on swing trading to understand how the game is played and what to look for and all of that stuff. Because if you understand swing trades and you learn that patience for the swing trades and you start to master some very basic technical analysis, it'll actually make you a better scalper. The difference, of course, there is just going to be your mindset that you're not going to catch every single move, because scalpers are more or less in there for 3 to 4, 5% scalps. Sometimes you might, turn your head and a candle will pump 11%, and that's great. It's a different mentality from swing trading, and that's where a lot of people mess up, especially new traders, because they want to scalp and swing at the same time using the same positions, and they end up wrecking themselves. Damn, why don't you just keep going, baby? Go ahead. I see you. I see you. Just keep on going. Let's play with Daddy. That's what I'm talking about. Okay. Anyways, so that's today's lesson, guys. So if anything was unclear, or there's something else that you didn't quite understand, feel free to hit me up in DM or in chat, and we'll see if we can sort that out. All right, thank you.